You're losing money because you're trading the wrong time frame. Not wrong because it doesn't work. Wrong because you haven't mastered it. You're jumping between 5-minute charts and daily charts and 4-hour charts and 15-minute charts. Thinking more options means more opportunity. It doesn't. It means more confusion, more noise, more ways to lose. The 1-hour chart is the time frame nobody talks about, but everyone who's actually consistent uses. It's not too fast like the 5-minute, not too slow like the daily. It filters out the noise but gives you enough setups to actually build skill. And there are 5 specific steps that separate random 1-hour trading from systematic consistency, not theory, not motivation. Structure you can apply today. Let me show you exactly how to master the time frame that actually works. Let's begin. Step 1. Choose one session and trade only that session. Not the entire day, not whenever you feel like it. One specific 3-hour window where you watch 3 1-hour candles form. That's it. Adapt this to yourself. Most traders think trading. The 1 hour means they're trading all day just on a bigger time frame. Wrong. You're still overtrading. You're still watching too much. You're still getting pulled into setups that don't matter. The 1-hour chart doesn't mean you trade every hour. It means you pick one session, you master those 3 candles, and you ignore everything else. For me, it's the New York session. 9 a.m. to 12 p.m. 3 1-hour candles. That's my entire trading day. I don't care what happened in London. I don't care what's happening in Asia. I don't care about the overnight move. I show up at 9. I watch 3 candles. I take my setup if it appears. I'm done by 12. That's the whole system. Why one session? Because you need to understand the personality of that time window. Every session has different behavior, different volatility, different patterns. The first hour of New York is not the same as the last hour. Asian session moves differently than London. If you're trading all sessions on the 1-hour chart, you're learning 6 different games at once. You can't master that. You'll always be guessing which behavior to expect. But if you only trade New York 9 to 12, you see the same patterns every single day. You learn how institutions move in that window. You learn which setups work and which fail. You learn where the traps are. After 6 months of only trading those 3 hours, you're not guessing anymore. You know, that's the edge. Most traders never build that because they're trying to trade 18 hours a day across 4 sessions. Stop. Pick one, 3 hours, 3 candles. Master it. Every time period has different characteristics, so you can't approach them all the same way. On the other hand, trading all day doesn't make sense. That's why mastering a specific part of the New York session makes complete sense. Because New York is usually productive and offers trading opportunities, especially since I prefer NASDAQ for day trading, New York is the most productive session for me. If you trade Forex, this might be London session for you. Then master London session. That's it. Get to know it. Constantly observe what happens when. You'll gradually become more confident and comfortable trading, because you'll better understand what to expect and when. Step 1. Kills your need for variety, and variety is why you're losing. You think you need to be active all day to make money. You don't. You need to be selective in one window. If your setup doesn't appear in those 3 hours, you don't trade. You wait until tomorrow. And that discipline, that ability to do nothing when your session doesn't deliver, that's what builds consistency. Not trying to force trades in 6 different sessions because you're bored. One session, 3 candles, nothing else. This way, you choose to use your limited mental energy and focus during the most productive time. And this is one of the smartest things you can do to get results when day trading. A realistic and reasonable approach looks exactly like this. If you want results, definitely apply it. Step 2. Define one setup that works on 1-hour structure, not 5 setups. 1. And it has to be a setup that actually respects 1-hour candles. Most traders take 5-minute setups and try to apply them to the 1 hour. Doesn't work. The 1-hour chart is not a slower version of the 5-minute. It's a completely different structure. 5-minute charts show you every emotional twitch. 1-hour charts show you where institutions are actually positioned. Your setup needs to reflect that. For me, it's a 1-hour pullback into structure. That's it. I wait for a clear trend on the 4-hour or daily. Then I wait for the 1 hour to pull back into a key level. Support, resistance, moving average, doesn't matter what you call it. When the 1 hour pulls back and rejects that level with a strong close, I enter. That's my entire setup. I don't take breakouts. I don't take reversals. I don't take continuation patterns, just pullbacks into structure on the 1-hour chart. Why? Because that's the setup I've taken 300 times. I know every variation. I know when it works and when it fails. I know which pullbacks are traps and which are real. This knowledge only exists because I stopped trading 10 setups and focused on one. Very clear and applicable. On the other hand, because it's 1 hour and I'm waiting for the close, it's impossible to miss the entry point. I don't have to decide in seconds. Find one pattern specific to the 1 hour candle and apply it. Or check if your current strategy is also efficient on higher time frames, and if it is, move it to the 1 hour time frame. That's it. You can still scalp if you want, but on the other hand, try this too and see how it works out. Observe how it makes you feel. Look at your stress levels, then you decide for yourself. Here's what one setup does. It gives you pattern recognition that actually matters. Every time you see your setup forming, you're not starting from scratch. You're comparing it to the last 50 times you saw it. You know if this version looks strong or weak. You know if the context supports it or kills it. If you're switching setups every week, you can't get that depth. You'll always be a beginner. But one setup for 6 months? You become an expert in that specific configuration, and expertise always beats variety. Define your 1 hour setup. Make it simple enough that you can spot it in 3 seconds. Pull back into structure, break out of range, rejection at level. Whatever it is, pick one and stop looking for anything else. Everything that's not your setup is noise. Let it go. Yes, I've told you this cliche many times. Grasp this thoroughly. We're trying to gain an edge against the market, and the most reasonable thing we can do is not leave gray areas. So if we know every step, our chance of making mistakes decreases. That's why one setup, one session, mastering it. Fixed risk, few criteria. All of these exist for this reason, because we're human and we can make mistakes, and we can find methods to minimize this. These methods are these. The fact that they're cliches doesn't change anything. The fact that they seem like ordinary advice to you doesn't change the fact that they can transform your life. If you want to be disciplined, if you're tired of breaking your rules, switching to higher time frames will definitely benefit you. That is, if you have the courage to do it. Because most people are so addicted to constant trading, trading higher time frames seems too boring to them. Almost unbearable. But they'll spend a few more years until they understand they need to change to become profitable. Then they'll decide to change things themselves, and the things they'll change will be things they heard from others before, and dismissed as cliches. The solution is quite simple and right in front of us. Don't consider it insignificant just because we hear it so often and think it's cliche. It's not possible to constantly make correct decisions on minute charts. Being constantly disciplined is nearly impossible. You might be violating your rules again and again every week and blaming yourself. You're actually attempting the impossible and you're not aware of it. There are ways to make this job easier, but you're acting like you're playing a game and you have to finish that game on the hardest difficulty. This makes no sense. Let's continue with step 2. Step 2 kills FOMO because FOMO makes you take setups that aren't yours. You see a breakout happening and you think, I should take this. But it's not your setup. You trade pullbacks. That breakout is someone else's trade. Let them have it. Your job is to wait for your pattern, and when you have one setup, that waiting becomes easier. You're not tempted by everything. You're only looking for one thing. If it's not there, you're not interested. This clarity is the difference between random trading and systematic trading. Random traders take whatever looks good. Systematic traders take only their setup. Be systematic. Reach a level where taking that setup doesn't even cross your mind if it's not your setup. Don't even notice it. Be indifferent to it. Don't care whether it reaches its target or not. What you do is clear. Who you are is clear. Trading might almost feel like it's constantly trying to lead you astray. No. What's actually happening is excuses your trading addiction makes up to convince you to press the button. And it presents these excuses to you as rational reasons, because it knows this is the only way it can manipulate you. All it wants is more dopamine, just like before, but you want to be a profitable trader, not dopamine. So become indifferent to it and kill your trading addiction. This is very important. Step 3. Only take your setup when the 4-hour or daily chart agrees. This is the filter most traders skip, and it's why they lose on the 1 hour. The 1-hour chart can show you a perfect setup. Clean structure, strong rejection, everything looks right. But if the 4-hour chart is in a downtrend and you're trying to buy a 1-hour pullback, you're trading against the bigger picture. You'll win sometimes, but you'll lose more, because the 4-hour structure will eventually overpower your 1-hour entry. You're fighting the current. The rule is simple. Check the 4-hour chart. Is it trending up, down, or ranging. If it's trending up, you only take long setups on the 1 hour. If it's trending down, you only take short setups. If it's ranging, you probably skip, because ranges are traps. But the point is, your 1 hour setup must align with 4 hour direction. No exceptions. I don't care how perfect the 1 hour looks. If the 4 hour doesn't support it, it's not a trade. Isn't this very simple too? But many traders don't even care about the higher time frame when trading lower time frames. In fact, some are so unaware that they keep changing their strategies. Yet their strategy is probably sufficient and good, but they haven't integrated it with the higher time frame. If they just set one criterion for being aligned with the higher time frame and use their strategy when that exists, they'd probably become profitable. It's that simple. This is one of the best pieces of advice I can give. Add the condition to your strategy that it must be in the direction aligned with the higher time frame, and determine one single criterion to identify the higher time frame's direction. If that criterion exists, let's say it's upward direction, then only run your long direction strategy during that time. That's it. Your win rate will increase noticeably. Very simple, right? But most traders don't use higher time frame confirmation. Why does this matter? Because higher time frames show you where the real money is positioned. Institutions don't trade the 1 hour chart, they trade the daily. But their daily moves create structure on the 4 hour, and that 4 hour structure creates opportunities on the 1 hour. You're not trading against them, you're trading with them. The 1 hour pullback you're taking? That's a 4 hour retest. The 4 hour retest is a daily continuation. You're riding the same wave, just entering at a more precise level. This alignment is what turns a 50% win rate into a 65% win rate. Not because your setup changed, because you stopped taking it in the wrong context. Always check higher time frames before you enter on the 1 hour. 4 hour must agree. Daily should support. If they don't, wait for the next setup. If you can be among the minority who can do this, you can make a lot of money. Like the minority. Because most people won't do what I'm saying. They'll look for long positions when the 4 hour shows down. They'll convince themselves there's no problem looking for up positions on the 1 hour when daily shows down, but 4 hour shows up. I've been through these paths. I know from there. You don't have to go through these paths and make all the mistakes one by one. You can take precautions. You can progress more reasonably and wear out your psychology less. Step 3 kills impatience. Because impatience makes you take setups before they're confirmed. You see your 1 hour pattern forming and you want to enter immediately. But you haven't checked the 4 hour yet. You haven't confirmed alignment, you're just reacting. And that reaction gets you into trades that look good on one time frame, but are terrible on another. Step 4, risk the same amount based on 1 hour candle structure every time. Your stop loss should respect 1 hour levels, not 5-minute levels, not arbitrary dollar amounts. 1 hour structure. If you're trading a 1 hour pullback into support, your stop goes below that support level with room for one full 1 hour candle of movement. That's your risk, and that risk should be the same percentage of your account every single time. 1%, 2%. Whatever your number is, it's fixed. You don't increase it because this setup looks extra good. You don't decrease it because you're nervous. Same risk, same structure, every trade. Why? Because the 1 hour chart gives you natural risk parameters. One candle of movement is usually 30 to 60 pips depending on the pair. That's your stop. You're not guessing. You're not using some random number. You're respecting the time frame structure. And when you do that consistently, your risk reward becomes predictable. Here's the trap most traders fall into on the 1 hour. They use 5-minute stops. They see the 1 hour setup, they enter, and they put a stop 20 pips away because they're scared of losing. Only amateurs do this. Never do something like this. Then the 1 hour candle moves 40 pips against them before reversing and hitting target. They got stopped out on noise. Their analysis was right. Their risk management was wrong. They didn't respect the time frame. If you're trading the 1 hour chart, you have to accept 1 hour volatility. Step 4 kills overtrading. Because overtrading happens when you're trying to force small risk on big time frames. You want to trade the 1 hour, but you also want to risk 20 pips. No, never do this. Use wide stops and normalize this. Can't do both. So you start taking setups that aren't really your setup just to find entries with small stops. And you lose. The solution is accepting that 1 hour structure requires 1 hour risk. Step 5. Review once at the end of your session, not after every trade. When your 3 hour window closes, you look back at what happened. Did your setup appear? Did you take it? Did you follow your rules? That's your review. You're not journaling every tick. You're not analyzing why the market moved, how it moved. You're auditing your execution. 3 questions. Did my setup show up? Did I take it correctly? Did I follow my 4-hour filter and my 1-hour stop placement? Yes or no. That's the review. If you followed all 5 steps, the result doesn't matter. Win or loss, you executed the system. That's success. If you broke a step, you note which one, and you focus on fixing that tomorrow. Not in real time. Not during the trade. After the session ends. This keeps you from overanalyzing in the moment and second-guessing your system. Most traders review wrong. They finish a trade and immediately start journaling. Why did this happen? What could I have done differently? What was the market telling me? Stop. That's not review. That's obsession. You're trying to control things you can't control. The market does what it wants. Your job is to execute your 5 steps. If you did, move on. If you didn't, fix the step you broke. One session review keeps you focused on process instead of outcome. You're not judging trades by profit and loss. You're judging them by adherence to the 5 steps. Did I trade my session only? Did I take my setup only? Did I check 4-hour alignment? Did I use 1-hour structure for my stop? Did I risk my fixed amount? 5 yes or no questions. That's your review. Anything beyond that is noise. You don't need to understand why the market moved. You need to understand if you followed your system. End of session. 3 minutes of review. Done. Step 5 kills overanalysis. Because overanalysis paralyzes you. You start seeing patterns that aren't there. You start adding rules to fix losses that were just part of probability. You complicate what was working because you're reviewing too much, too deeply, too emotionally. One session review keeps it simple. Did I execute my 5 steps? Yes or no? That's all you need to know. Over time, that simple review builds a track record. You'll see that when you follow all 5 steps, you win 60% of the time. When you skip step 3 and don't check 4-hour alignment, you win 40%. The data will show you what matters, but only if you keep the review process clean and unemotional. End of session. 5 questions. Move on. Here's what happened when I committed to only the 1-hour chart. I went from 6 timeframes to 1, from 20 trades a week to 3, from 50% win rate to 68. Not because I got smarter, because I stopped spreading my attention and started building depth. Everything else disappeared. My results transformed. 6 months of the same 5 steps every single day. That's what mastery looks like. Look at your current trading. How many time frames? How many sessions? How many setups? Too many. Cut it down. 1 time frame, 1 session, 1 setup, 1 filter, 1 risk approach, 1 review. That's it. Stop adding. Start removing. Consistency is trading one thing perfectly. The 1-hour chart will save you from yourself. Slow enough to filter noise, but fast enough to give you setups. Structured enough to respect institutional moves, but flexible enough to let you build skill. And these 5 steps give you the exact framework to stop guessing and start executing. Choose your session. Define your setup. Align with higher timeframes. Risk based on structure. Review once at the end. 5 steps. That's all you need. Master them and finally see what consistency feels like.